Ladies and gentlemen, good evening. Tonight, I want to discuss a company that has quietly become a standout in financial services, Primerica Incorporated. In a sector often dominated by legacy institutions and incremental change, Primerica has built a unique identity, serving middle-income households, operating a capital-light distribution model, and demonstrating growth potential that has attracted investor attention. Recent earnings show that Primerica continues to deliver strong performance. In its most recent quarter, the company reported diluted adjusted operating earnings per share of approximately $5.46, up around 10% year-over-year. Revenue exceeded expectations, with notable strength in its investment and savings products segment. These results highlight that the company's business model remains resilient, navigating macroeconomic uncertainties and market headwinds while continuing to grow. Analysts have issued a positive outlook for Primerica's earnings trajectory, noting improved margins and steady growth in core segments such as term life insurance and investments. They emphasize that the company is well-positioned to benefit from long-term demographic tailwinds. Such endorsements signal confidence not just in short-term results, but in the company's strategic positioning over multiple years. Valuation is another factor drawing attention. Some models suggest that Primerica's current share price may not fully reflect the company's growth potential, indicating meaningful upside for investors who recognize the long-term opportunity. This combination of strong earnings, solid fundamentals, and growth prospects creates a compelling story for those tracking financial services companies with a capital-light model and scalable distribution. Why is Primerica's model so distinctive? First, the firm focuses on middle-income households, a segment often underserved when it comes to life insurance and investment products. Primerica's independent licensed representatives bring these solutions directly to their clients, combining personalized service with accessibility. Second, the company operates with a capital-light structure, relying on product distribution rather than heavy asset ownership. This allows flexibility and scalability, distinguishing it from traditional insurers and banks. Third, Primerica's combination of recurring revenue from investment and savings products, along with underwriting profits from term life insurance, provides a diversified income stream that reduces dependence on any single business line. That said, there are challenges to watch. Sales force productivity is critical. As the agent base grows, maintaining high productivity per representative is essential. Rising costs in technology, regulatory compliance, and distribution could pressure margins if revenue growth slows. Moreover, while valuation appears attractive, market expectations are high, and any misstep or macroeconomic shock could create short-term volatility. Looking ahead, several strategic areas deserve attention. Growth in the investment and savings segment could accelerate margin expansion, while continued recruitment, training, and retention of high-quality licensed representatives will keep the distribution engine strong. Maintaining favorable underwriting performance in term life products, managing lapse rates, and sustaining operational efficiency will also be key. Finally, effective capital allocation, whether through share buybacks or dividends, could act as a catalyst for shareholder value. In summary, Primerica occupies a unique position in financial services. It may not always make headlines, but its combination of a resilient earnings model, targeted market focus, scalable distribution, and growth potential makes it a compelling story. With the right execution, Primerica has the opportunity to continue delivering strong performance, benefiting both investors and the middle-income households it serves. Thank you for listening.